Hey, yo, what's up, Outliers? Happy Meme Stock Saturday. Great to see everybody. Hope the week is going well and you're all enjoying the weekend. We have had some absolutely awesome weather here in San Diego. It's been pretty dope. And your boy has been in the lab doing a bunch of just general research analysis kicking off the year. There's a bunch of new profit mechanisms that I've been exploring over the last 18 months that have been of interest. But today we're going to take a look at GameStop. We're going to take a look at Rocket Lab and then probably a couple other names that is of interest to you all. So want to say hello to everybody that's coming to hang out. I see Kirk, Lauren, Wiggly Worm, Michael, Reese, Level Upper Man. Great to see you all. Looking forward to hanging out. At a high level, the market had a good week last week. S&P closed at highs. It broke out of this repeated attempt to break above like this 689 handle, and it broke out convincingly. This, you can see all this stuff has been drawn for a little while now. This here was what I typically refer to as a decision point, but it was in the context of generally just supportive markets, right? We're seeing successive, slightly higher lows here, and the market clearly enjoyed and rallied up and out. That is for large caps. If we take a look at small caps, we see a similar story, but the structure is a little bit different. Why am I focusing on small caps? Because when we're talking about meme stocks in general, a lot of them are going to be in like the smaller mid cap range. Not all, but a lot of them. Here, one of the big differences that I notice in small caps versus large cap is the fact that it hasn't struggled to break new highs. We had a higher high, a pullback, a higher high, higher low, lower high, but this is like interim, this is normal, posting a lower high. This now becomes, again, an important inflection point, but it rallied out and then easily posted a new higher high. And if we zoom this out over a long-term time frame, you can see that we are at peaks and the market right now looks generally happy. I do want to talk really quick about volatility and just the VIX complex, because volatility, I still think, is egregiously low. Trump is now talking about, getting involved in even more countries. There's just a lot going on in the world. And then I always have to ask myself, compared to other reference timeframes, do I actually think vol is lower now than it is at some of these other reference points? And I don't think so. I do think that some of this is being artificially suppressed. It's hard for me to quantify how much that is, but overall breadth does look good. So the market rally right now, I think, generally looks supported. Let's talk about GameStop. GameStop has been in this pretty nasty downtrend. I actually need to extend these really quick so that we can take a peek. This is clearly high, posted a low, lower high, posted a lower low, posted a lower high, higher low, lower high, lower low than here, but still not all the way down. The way that I interpret this is this clearly is serving right now as some sort of consolidation handle. This alert, again, was drawn a while ago and it's still not been violated. It genuinely wouldn't surprise me if it was. The reason why I say that is because earnings was meh. Earnings was not very good. And we're going through a bunch of store closures, which we're going to talk about. I actually think that that's still good. The company needs to continue this cost-cutting function. It's got to do it. It's got to get rid of the dead weight. And they're still sitting on a lot of cash, which is really, really good. The problem, as you guys know, and I say this pretty regularly, GameStop is not a bank. Them making interest income as part of their EPS is nice, but that's not what they're meant to do. They're not a bank. We want to see that EPS coming from sales, revenue, efficiency metrics, stuff like that. The company's in the middle of a turnaround. So we have to accept some duration of this. But as always, the question becomes, well, how much? Do we think that, yeah, like, how long do we think it's going to go on like this? Because the other thing to remember is the high rate environment that has helped GameStop effectively become profitable is changing, and it's actually going away. That's not ideal, and it's going to cause a little bit of compression. The good part is none of that gets rid of the cash that they have. And the other question I have to ask myself is based on the prospects back here on, like, what is this? August of 2024. And I say to myself, well, do I think GameStop is better off right now than in August of 2024? My opinion is absolutely. I think GameStop is absolutely in a better position now. So when I see these price equivalents, it helps me identify where I think a proverbial floor might exist. And we'll look at the options market in a moment, because the options market is really, really useful at helping us assess probability density functions so that we can see where the market thinks we might actually turn out into. The problem, as far as I see it, is that these lower highs are bad, and they're extending in the incorrect direction. And again, this is one of the interesting things about technical analysis, is the fact that you just saw me extend this to the left, and you can see how clean that lines up pretty magically, and how clean a lot of this stuff lines up. Some of that stuff is pure happenstance. Some of it is actually like function of how the market behaves, but I always find that interesting. This has been drawn for a little bit, and how clean that is. That curiosity aside, if we look across what I typically do, MTA, multiple time frame analysis, on a 1-year time frame, standard deviation channels, linear regression channels, whichever your choice is, downward sloping, negative. That means that we're not growing. 6-month time frame, negative, same. 3-month time frame, negative, same. 1-month time frame, negative. When I see something negative across all of these time frames, it immediately leads me to lean more bearish than bullish. You almost have to. Over the last year, the stock has returned negative 36%. Over the last 6 months, it's down 9%. Over the last 3 months, it's down 11.8. Over the last month, down 4. Over the last 10 days, down 1.4. Over the last 5 days, up 3% from this uptick, which is good. Couple issues as far as I see. This gap was really rejected, and I was actually surprised to see this gap. More importantly, the price level up here at like the 21.5 handle was not well sponsored. What I mean by that is, as I look at volume, I can see volume absolutely expanded here, but it was majority sell side volume. Then this still is sub any sort of reasonable expansion volatility metric using 20 period volume average, or 5 or 20 period are kind of the main ones I would use here, and it's below both of those. So that's like a lightly sponsored move, and the stock is continuing to generally trend down. From a high level, what I see is, I think the broader market environment is becoming increasingly favorable for something like GameStop. I think when Cohen decides that it's time to start implementing the cash that they have, I think they're in a good spot, about as good as it's going to get. The rate environment is set to come down a couple more quarter points, about 0.5 point, I think, this year, if that's correct. Let me double check. I don't want to give you guys bad info. It's either 2 or 3 quarter points, but I'm not positive. I have not seen the latest, and it looks like it doesn't want me to. What's going on? What the fuck is all this? Literally not populating. We need to get the Fed back in action here. That's bullshit. Nonsense. Anyways, I think it's 2 or 3 that's scheduled so far this year. And that is good for companies like this. The funny thing is for GameStop, it's like good and bad. It's good because the lower rate environment is going to be better for GameStop, its primary consumers and stuff like that. That's great. It's bad because one of the primary ways that this thing is actually making money right now is from earning interest on its cash. That is going to slow down a little bit, which again, I have to imagine Cohen expected that at some point. Obviously, he's wise enough. He knows that that environment isn't going to persist forever. So I'm part of me is curious if part of his plan was ride that environment as much as he possibly can. And then maybe there could be some opportunities that he's looking at now as far as acquisitions and whatnot, but we'll see. Wiggly says, strongly feel GME needs to pursue inorganic growth. Talk to me a little bit more, Wiggly Worm, about what you see as far as inorganic growth. I assume that means some sort of acquisition, but I'm curious a little more detail around that. I think GameStop has enough cash that it can do kind of whatever it wants. But GameStop is in a really, really interesting scenario here, and they have an interesting perspective, I believe. If we look at the GameStop universe, well, first, let's break down where their money's coming from. Oops. Not what I wanted. I want this. Do they have a breakdown in here? Let me scroll. What the fuck? Oh, they don't. I see. That's from the other window. I'm an idiot. This doesn't have the breakdown. That's unfortunate. Let me see really quick. Let's ask Grok. We'll see if Grok can do a good job here. Breakdown GameStop's sales and revenue by offering and category. We want to see, well, I want to see where right now it's making its money, because a few things. While that's running, I look at the ecosystem of GameStop. It has a really loyal shareholder base. This is useful, but if we think about the shareholder base, and you guys would know better than me, I'm genuinely curious. I don't know how many shareholders like GameStop for the company, so the people that actually like GameStop as a company, versus those who like it for a short squeeze play. And I don't know. I have absolutely no clue. I would imagine a bunch of people really like GameStop, the company. And these two might not actually be mutually exclusive. They might like the company because of the potential for this, but I do think that the total number of GameStop diehards changes if this is, let's say, fully out of the picture. I'm not positive. I'm genuinely guessing. The reason why I'm guessing this is because, and I want to be clear, I don't think the short squeeze element in terms of them all becoming super rich. I think that's what a lot of people want, but I also think a lot of people just want to see some of the institutions get fucked. And I don't blame them. They do plenty of stuff to be on the receiving end of it. So I don't blame that sensation at all. The reason why I say this is because we know right now that the overall propensity for GameStop to have a short squeeze at this moment is pretty low. That's due to the availability of the underlying. It's not that expensive to hold. And it's the days to cover isn't that crazy. But we also know that it's kind of like a ticking time bomb, because at any point the cat could come back And that can really start throwing things all over the place, which, again, I think is one of the unique opportunities that exists in GameStop. So we have this as a function. From a revenue perspective, I see hardware and accessories as 55% of their revenue. I see software as 26%. Collectibles as 19%. These don't add up because I was rounding, just so you know. This is from fiscal 2025, which ended on 1 Feb. Net sales were 3.8 bill, which is a 27% decline year over year. What's the issue here? The issue is I needed an Xbox controller. Where did I get my Xbox controller from? I got mine from Amazon. That's actually a lie. I got one of them from Amazon. There was a different one that I got from Target, so they were the only ones that had the one that I wanted. My buddy that I play video games with, he got his from Target. When we think of a lot of hardware and accessory procurement, if we were to look at that across the environment. So let's ask Rock with a follow-up. In the gaming industry, break down the percent annual sales by company. Which companies can have the most percent of hardware and accessories? Let's see. While we monitor the way that pans out, we can still think about the rest of these software. We already know that this is declining rapidly. The reason why this would rapidly decline is, again, games now, there's not even physical copies. Most games you're getting either through a platform like Steam, or you're getting them through your console itself and then hating your life because there's not enough storage because the games are fucking huge. But shit like that. This naturally is going to die off. There's not any sort of great reason to go to GameStop, a physical store, to do this. That's not to say that it will go to zero, but if we were to speculate where this might go, it's probably pretty fucking low. That's my guess. Collectibles, I think, has an ability to grow. And we know that collectibles has a pretty strong footprint overall. Collectibles are no joke. I'm not that familiar with them, but I can absolutely see the fact that collectibles is a big industry and there's a physical element to this that's good. That really helps a physical place like this. Even with the advent of NFT housing and blockchain housing of collectibles, there's still, I don't think, ever going to be a time and place where the physical collectible is completely phased out. And I think that that's an opportunity for GameStop. Hardware, I think, is still an opportunity, but I don't think that this is some sort of huge opportunity. I'm going to take a look through the resellers of these kinds of things to see where they come from. Okay, so now do the same analysis for resellers and the primary source for consumers to acquire the hardware and accessories. Looking at the primary producers, it's Sony, Tencent, Microsoft, which is Xbox Activision, Nintendo, NetEase, EA, Epic Games, Take-Two, MiHoYo, Roblox, which make up like 66%. It's actually really interesting. And now we're looking at where do people customers actually acquire devices and hardware and accessories. So, as expected, Amazon is 27 to 31% of the market. So let's take a look here. Out of hardware and accessories, which is a $7.5 billion market in total. Let's get rid of this for now. This market in total is $7.5 billion. This $7.5 billion is broken down into Amazon as, let's call it 30%. Then Walmart is 20%. Best Buy is 15%. Then there's GameStop as number 4 at 12%. This is probably one of the higher margin sources GameStop has access to, and they're underperforming massively. Amazon has doubled them. Walmart has almost doubled them. Best Buy is the closest competitor, which is also obviously a pretty small group. And then Target, for those wondering, is down here. And Target is at 10%. So as you typically would expect to see, there's heavy concentration in the top 2 or 3 that happens in a lot of industries because of economies of scale and whatnot. As a betting man, I do not see these two losing their lead. I don't see that. There is a world where these go back and forth based on whatever, and there's a potential to slide up slightly. But if we look at the total market cap available here, it's effectively what Amazon is, a little less. As a betting man, my guess is this residual down here is going to slowly be consumed by these. That doesn't mean these go to zero, but I do think that these two will increasingly pressure these. The big benefit that Amazon has over something like GameStop is its margins. It can sell things for cheaper because it doesn't have physical storefronts. It has massive warehouses that hold tons of things, and in a probably one of the most sophisticated logistics trains ever developed. That gives it a massive, massive advantage over everybody else on this list. Walmart has scaled and is attempting to keep pace, which they absolutely need to, by the way. So, if we look at GameStop's primary sources of revenue, my expectation is hardware and accessories goes down, software goes down, collectibles might be able to go up. So now going back to Wiggly Worm. Wiggly Worm says vertical integration or acquisitions. I don't care what they buy as long as it has proven revenue. If they do stuff like power packs, they could acquire the likes of Tops or Fleer or Upper Deck. It's a great idea. And based on our hyper rudimentary analysis here, I think it's very, very fair to say one of its best possible places to play is in collectibles based on what it's currently in. I think it doesn't bode well to massively invest in trying to acquire more here because of the competition here. That's probably not going to go away. Same thing for software. I don't think either of those change. I think in terms of current business lines, collectibles, hands down is its best way to go. because Amazon and Walmart and Best Buy and Target do have some access to collectibles for people that buy, like basic cards and stuff. I've seen them in those stores, but it's not the same. They don't have like the grading presence and stuff like that GameStop does. This leads to what's the next opportunity? I think the next opportunity comes from here. The exceedingly loyal base. Whether they exist for this reason or this reason ultimately doesn't actually matter because they have aligned incentives. If you like GameStop for the company itself, you want to see the share price go up. If you like GameStop because you're waiting for a short squeeze, you want the share price to go up. The cool part is, regardless of the reason, they're in the same boat. They want the thing to go up. And we know that the apes and the GameStop community writ large is extremely powerful. That gives you an outstanding market to tap into if you can find things that they like. If we break down what the shareholder base and the current consumer base for GameStop looks like, you can create a demographic picture of average age, average income, average education. You can break all of that down. And then you can sit and think through what kinds of things would it make sense for us to offer them via what medium, physical or virtual. But there's a massive market opportunity there alone. This is before we even start going the route of external acquisitions, which we know GameStop has the capital for. To go to Wiggly Worm's discussion, I absolutely think that there's going to be some sort of external purchase because I don't see GameStop able to take the hardware or software piece of their business, which comprise almost 80%, over 80% of their total revenue, sales, I should say. I don't see those able to be meaningfully transformed based on my current understanding of the gaming industry and stuff like that. The major opportunities that it has within its current structure comes from the collectibles side, but I think GameStop has a profound opportunity if it can start cracking into the shareholder base with other offerings and its current consumer base with other offerings, which I absolutely think is entirely doable. The big question I continue to have for somebody like Cohen is like, when? When does this actually happen? Because we've been going on for a while. If we look at the current news for GameStop, we know that there's some pretty serious store closures and a continued store closure effort going on. So new closures follow the 590 stores during the last fiscal year. Let's see. It says GameStop reportedly planning to shutter even more stores. Sources from customers, local media, that the video game retail chain will close down multiple stores in Ohio, Illinois, New York, Kansas, Kentucky, Connecticut, Minnesota this month as part of an ongoing cost-cutting effort and to adapt to changing shopping habits. There's a really good chance, in my opinion, that GameStop will continue to close probably even more than just its non-profitable stores. But it's going to try to decrease its footprint into places where there's a lot of physical density. So think of the Apple stores. Apple stores aren't everywhere, and that's by design, but they're not as not present as like super high-end stores. There's like a middle ground. For a while, GameStop was everywhere because it was the only place you could physically go get games, and there was gamers everywhere, but that picture has changed quite a lot. I don't know how far this goes. So it says the list confirms that 25 locations are confirmed to close this month, with 9 listed as reporting through customer alerts. So there's 590 during the last fiscal year. There was 1,000 stores over the preceding year. So the company currently operates 2325 in early 2025 and 3,200 stores globally. So they're obviously moving pretty hard to continue cutting, which again makes entire sense. A lot of these brick and mortar stores are difficult to justify. I think it makes sense. J-Card says collectibles were 31% or 31% of sales last quarter. I don't know. What I see from what we looked up here, this is from sec.gov via Grok. It says for the most recent full fiscal year, which is 2025, ending 1 Feb 25, net sales were 3.8 million, or I'm sorry, 3.8 billion or 3,825 million, which is a 27% decline from the prior year. And I see collectibles as 18.8% of that here. Again, I don't fully know. And then I see for the most recent quarterly data, which is I think what you're referring to, which is Q3 2025, that collectibles were 31% of their sales of 821 million, which is down 4.6% year over year. So I think, J-Card, you were probably looking at quarterly, and I was looking at the last full fiscal year. And I see for Q1 2025, collectibles were at 28.9%. If we look at this quarter over quarter, it really gives you actually a pretty good look at what's going on. I'm going to go back to GameStop really quick and ask it to give me the same breakdown for GameStop. Give me the same breakdown for the past 8 quarters. And we'll literally be able to just look at it quarter over quarter and see what the broad trend is, because those quarters right there already give us a little bit of insight into what the trend is. Let's see. I got it at 1733. Okay, so we have enough time to go through a little bit of options here too. All right, while that's going, let me see. Michael says, which is the best bank to own? Oh, I think you're talking about GameStop, that it's the best bank to own for much more upside. That was at least that's how I'm interpreting that. Okay. It looks like Grok is producing. Here we go. Let me pull it over here. Okay. Looks like it froze. It's still going. It's still going. Let them cook. Let them cook. Okay. Let's take a look at collectibles. 13, 15, 17, 19, 21, 29, 23, 31. So collectibles meaningfully continuing to grow as expected. Software, 26, 27, 26, 31, 22, 24, 20, or 15, 24. Not gonna lie, more resilient than I would have expected. That's good. Hardware, 61, 57, 56, 48, 56, 47, 61, 44. This definitely is trending down, which is definitely what I would expect to see, but also still resilient. Its totals, though, are not looking good. Total net sales is definitely coming down. This looks about what I expected to see, though, where collectibles clearly is expanding, and I expect that to continue to be a big part of the revenue picture. The problem is, what this tells us is essentially collectibles going from 13% to 31% isn't enough, and its overall volume isn't enough to compensate for hardware going from 61 to 44, or for software going from 26 to 24. Because take a look, the percentages can be a little bit misleading if you take a look at how much it actually is, which is 465 down to 197, and it's because the total numbers are declining. What that tells us is that, I mean, if we look at the movement in collectibles as a number, it hasn't actually moved that much. 233, 136, so it dipped in here, then it started rallying back out, 270, 211, 227, 256. So this actually hasn't moved that much. But what's happening is the total profitability is going down, the total pool of money is a percentage, and this is just comprising larger of that. I guess the benefit there is that that obviously shows that the collectibles is definitely more resilient than what we're seeing from software or hardware. Because hardware went from 1.1 billion to 367 million, and software went from 465 to 197. Those are huge cuts. This is clearly the main thing it has going for it, at least at the moment. Now, the other thing I think you guys wanted to talk about, I saw in the chat, was this, the comp package. And I haven't looked at this yet. I actually didn't see this news. I don't know what this is. So the first thing is, what do you guys think of it? Help me understand what's going on here. This says on Wednesday, unveiled a comp package for 35 billion. Holy shit. Hinging on a turnaround that requires them to lift the retailer's market value more than tenfold and sharply boost its profit. Hitting the targets requires significant shift. The company's annual revenue, yeah, we already know those. So the plan laid out market cap to 100 billion and hitting 10 billion in cumulative performance. So there's no guarantee pay in terms of salary, bonuses, stock. And as currently as a capitalization of 9.26, hit a record of 34. What are the rest of the terms of this? Stock options to purchase more than 171.5 million, 2066. GameStop's market capitalization. Oh, I understand how they're doing. So they're saying if the stock hits the target valuation that they're targeting, 100 billion, that's what his stock options would be worth. So this isn't a 35 billion package at all. What's the threshold? So does he get this? What are the triggers for this? What are the triggers for this? Does it need to hit 100 billion in order for this to hit? Or is it laddered? Because that's, I mean, like this looks crazy to me. The fact that the company itself right now is worth less than 10 billion, but they're effectively saying turn this around tenfold. I don't know what the timeline is. This says it resembles a 10-year incentive plan, but I don't know. Let me see if we can figure that out really quick. Well, it doesn't really matter that much. Effectively, what I see here is a hyper-aggressive package depending on, okay, so Goofy says there's 9 rungs over the next 10 years. Yeah. So this to me almost looks like what Cohen did with the latest offering. Like that's kind of what this looks like to me. because with a lot of the value of the convertibles that were offered at like the 30 handle, the probability of GameStop actually hitting that realistically in that time frame is kind of low. CJ saying that, okay, so here it is. Thank you. Sorry, I literally skipped right over it. So this looks like just super opportunistic planning. And the reality of GameStop hitting in the 30s for those convertibles to come through is probably pretty low, but it's a low cost function, which this is a relatively low cost function as well for GameStop, especially because in terms of tranche 8 and 9, notice how those are 15%. It goes up pretty significantly at those points, and it's because it's unlikely to hit those. That's why it's not linear. So yeah, I totally see this, because again, the other thing to remember for somebody like Cohen is like, dude already is filthy fucking rich. So sure, anybody would want billions, right? Who wouldn't? But it's not like this is going to meaningfully change his day-to-day life at all. That's one of the biggest things I've learned about wealth, is once you get to the point where you have enough money that the additional accumulation doesn't necessarily change your day-to-day tremendously. And he's already past the top rung. For somebody like me, the next couple rungs would be like buying my own private jet. Like that would be the next really meaningful rung. And it's obviously really expensive to do that and maintain, but he already has access to all of that. He could buy effectively whatever he wants, whenever he wants. So the incremental gain of these different dollar amounts really isn't that powerful to somebody like him. I view the opposite for somebody like Elon Musk, though, because Elon Musk is trying to finance a bunch of other shit and try to go to fucking Mars, which is expensive. He needs as much capital as he possibly can, not because he's going out buying yachts and living super lavishly, although I'm sure he's living very comfortably, but he's trying to finance a bunch of other shit. Cohen, as far as I can see, he targets a company and then he stays with that company for a while. Slightly different targets, I think. So yeah, this looks super aggressive to me, but it doesn't surprise me to see it broken down in this way at all. Effectively, they need to double their current market cap in order for him to even hit the first tranche. That's before we even have a conversation about 10xing it. So yeah, I think this is designed to turn him in the correct direction. But again, even the probability of him doubling over the next year, I do not think that that is significantly high. Now, the good part is once he doubles the first time, I do think it is quite likely that that will happen, but it'll probably take a little while. But I do think when that does happen, you start to build economies of scale, especially depending on what he pivots into. That's the big RFI, request for information. That's the big question. What does he pivot into? Because based on what he pivots into, that changes all of these dynamics. If it's something that can scale significantly, then yeah, this starts to become more probable. But this stuff here is not quite as not quite as probable in the near term, at least in my opinion. Overall, very cool. Let's take a quick look at the options market and see if anything sticks out with us with respect to GameStop, because I do want to make sure that we have a couple minutes to talk about a couple other names. Ooh, a lot of short call premium. That's probably people selling calls. I still have the coverage strangle on. When's the last time I sold calls? I literally just sold them not that long ago. It was all good just a week ago till it wasn't. Let me see. 7 Jan. So 7 Jan, I rolled the short calls. I had the 24 strike, sold them for 71, took them down for 15 cents. And then I am now in the 24 strike in 20 Feb, and I got those for 60 cents. So yeah, just a small adjustment there. The volatility in GameStop is still absolutely insanely profound. And the call skew isn't quite as strong as what it was. Right now, I'm waiting because my basis is 2247 on my current equity. I'm waiting for it to trickle down a little bit more before I accumulate a little bit more. That's really just to maintain purchasing power of GameStop and where I want to start scaling in a little bit more. So right now it's a little bit premature. I want to try to increase my utilization when it's closer to like the 20 handle, which again, I would not be even remotely surprised to see if it goes there. CDJ says GME will hit and maintain 20 billion this year. Certainly hope so. It's really not that crazy if a really good transaction goes through. It's just a really big if. And if it does happen though, definitely. Like I definitely think that's not insanely improbable. I think the part that makes it a little more challenging is just the fact that the timeline for it just gets more and more compressed the further that we go on. Land Lucas says, wait, you think it's not likely that GameStop goes back to 30 in 2026? No, I don't think that. But I do think that the probability of GameStop hovering above the 30 handle at a advantageous time for the convertible debt to actually convert is pretty low. Because those convertible bonds and whatnot, they need GameStop not just to be, at 30, but they need it to be above 30 and to stay up there in order for it to make sense for them to convert. And based on the current information that we have about what GameStop currently is doing, I don't see that as a likely scenario. Does that mean that GameStop doesn't pop above 30? Sure, it certainly could do that. That's well within the realm of possibility for it. Hasn't done it in a while. We haven't seen GameStop above 30 since effectively the last squeeze that we saw back in May. And then we saw it during, January before that as the market was trickling back down. So I definitely don't think it's a high probability for GameStop to hover up there long enough for the convertible debt to really be able to monetize it in any significant way. The probability of GameStop going up to 30 in general, we literally could look at the options market and we could see what the market itself is pricing in. Let's go to here. We'll do probability of a touch within one standard deviation. And let's just see how far out we need to go before 30 pops up. I see 30 here. So it first crosses 30 at about 15 May for the probability of a touch. Now let's take a look at the probability of expiring. And the probability of it expiring at the 30 handle occurs here, which is like 29 October based on current pricing. So yeah, I think that the probability is just pretty low. And if it does, it's definitely going to need a bit of time in order to get there, but it can get there. The good part about where GameStop is now, it really just needs like a good catalyst. If it gets a good catalyst, then I think we have literally a completely different dialogue. But it needs to have a good catalyst, which right now I don't fully see on the docket based on what we've heard. That doesn't mean that there isn't one cooking, and then once it's released, it's released. That's the hope, is that there's something cooking. The options market right now looks generally quiet to me. So it's mostly bearish. A lot of these are going to be short calls, just collecting premium. All of this looks quite normal. Strikes, all that looks normal. All the activity in the front looks normal. So nothing sticking out there. I will say that the call OI looks light to me relative to what it typically is, but a significant amount of it is on the short side, which again, that makes sense to me. People are monetizing the volatility. And again, a lot of people will see like an implied volatility percentile and rank of fucking 0. And they'll say like, well, why would anybody sell here? The vol is so low. Volatility is still high for something like GameStop. It's still 40%. So even though that this is still low, it's not low in nominal terms. It's just low in relative terms. It still is attractive for collecting premium against holding shares and stuff like that. Lance says, do you think since they're going to have the CEO compensation meeting in April, Ryan should give guidance for March for Q4 earnings to get shareholders to vote? It would be an interesting tactical decision, but I am of the opinion that like in for a penny, in for a pound. And I just think like we're past that. I think anybody that's interested in holding GameStop right now is effectively making a bet on Cohen. Like that's effectively what this is. Let's take Cohen out of the equation. Let's take the residual scenario of GameStop, the past, out of the equation, because we know it's had short squeezes. We know it has Roaring Kitty, aka GameStop Batman, but all of that right now is quiet. The stock is easy to borrow. There's tons of availability, so the probability of a squeeze is pretty low. It's a brick and mortar business that we just looked at. Its primary sources of revenue are falling, and it's in pretty deep competition. We haven't heard any significant announcement in over 2 years regarding any significant pivot of the company. There's been some small things, but nothing big. If it's anything other than Ryan Cohen and in some sort of massively positive expectation around the way Cohen will manage the business, there isn't anything on paper or in the pipeline that warrants GameStop to quote unquote do well. But a lot of people, myself included, understand that Cohen is super fucking smart. He's done a profound job historically, and I absolutely am bullish on him. It's the same way that I view, for those that know Tasty Trade and Tom Sosnoff. Tom Sosnoff is a serial entrepreneur, started a bunch of businesses. He started Tasty, made that literally billion-dollar company, got out of it, and he started this new thing. I have a podcast with him next week, actually. He started this new thing called Lost Dog. And with Lost Dog, it's absolutely fascinating because it's a completely different business model. It's completely outside of the markets and all this other shit. And yet, I am absolutely bullish on Tom Sosnoff figuring out how to make that thing profitable, where when I look at it at face value, it does not jump out to me. And again, it's just because there are some minds like that. Same thing with Elon Musk. Anyways, the point that I'm making is I think a really big part of GameStop right now is the bet of Ryan Cohen and on Ryan Cohen, which I clearly am also making that bet. I think that there's certainly something there. The trick, though, is it's very clear that he likes to keep things really close to his chest. And because he does that, then I don't think that there's a lot to go off of other than the innate performance and behavior that he has. Lance says, do you honestly think Cohen did a good job the last 4 years or could have been better? I don't like framing it that way. Could it be better? Of course. Everything could effectively always be better. And you can always identify stuff that could be better in hindsight. But do I think that he did a good job? Abso-fucking-lutely. He made some of the best timed offerings and strategic decisions with respect to capitalizing the company to even be able to have this fucking conversation. All of that is because of those decisions. Now, the people that like GameStop for the short side of the equation, that's tough to swallow because he's effectively selling into their faces. But as much as the short people or the short squeeze people want to see a short squeeze, Ryan Cohen is not managing the company to a short squeeze. He's managing the company to be fucking profitable. So in the context of his mandate in shareholder value, that's the right thing to do all day. And because he did that quickly and quite strategically, he has raised an obscene amount of capital that allows us to even have this conversation about GameStop and the potential avenues that it might have. Because otherwise, we're just talking about a slowly dying brick and mortar store in a pretty high competitive environment. So I think in general, yeah. Wiggly says, Cohen said on October 25, I cost the shareholders a lot of money. Yeah, of course he did. Of course he did, because at the point, GameStop was higher. He was talking about the pivot to building warehouses and such when he first took over. Yeah, exactly. That all makes complete sense to me. Completely agree. And I think that, exactly, and I agree with you, Wiggly, the accountability there, saying, yeah, this was the wrong pivot, and then to move around it for sure. Land says you're happy about the dilution. Yeah, for sure. I think for the success of the company, yeah, I think the dilution was super important to the success of the company. And without that, I think the company just slowly fades away into the grave because, again, short squeezes aren't a business model for companies. Yeah, I absolutely think that they're the right choice for GameStop and GameStop long term, without a doubt. Peter says, do you think that inevitably strengthening the business might cause a squeeze of sorts? Not positive. That's a good question, but I think the problem is the conditions for a squeeze are really, really specific. And strengthening the business doesn't inherently help or hurt that, in my opinion. I think it actually might hurt it slightly because the fewer shorts that are interested, the less that shorting pressure. So the more successful GameStop becomes, the less of a draw it is for those systemic short sellers to try to, bury the company, which that doesn't mean that there can't be squeezes, but it's just not what GameStop community is typically used to considering a squeeze. Like, this is a squeeze here. This is absolutely a squeeze that occurred, but it's just not the MOAS that people are talking about. This was a 25% move in 4 days. And again, like, most people are like, yeah, that doesn't even like register on the fucking Richter scale, which I understand. A lot of those people are desensitized when they see GameStop trading, near 1,000, but that still is a squeeze. So stuff like this can still squeeze, but it's super unlikely, I think, for the mother of all short squeezes, that whole thing to come online, especially if there's as much abundance of the underlying. One of the key conditions that occurred previously was when the HODL gain came online and the HODL folks were HODLing, right? And that started consuming the majority of the accessible float. Without that, and without that being consumed by something, whether it's institutions, retail, whatever, that makes it way more difficult for a squeeze to occur. So yeah, I think unless we see some sort of change in dynamic, I think that as the company becomes more successful, it's unlikely to see the kind of squeeze that people are hoping for. But I do think it generally decreases the probability of a squeeze. But smaller squeezes, I still absolutely would think are on the docket, like with most stuff like this, because it's not out of the woods yet. It still has a long ways to go. And that's still absolutely going to draw shorts into the picture, because anything like this would absolutely still continue to maintain shorts. So you can see that the short volume, it's like what, 0.65 is a ratio. So yeah, I mean, it definitely still is interesting, but take a look, man. Like, the borrowing rates have even come down tremendously. They used to be pretty significant, but yeah, the total short isn't super huge at this point. So yeah, which there's some, but not a ton. On a daily basis, it's still experiencing a decent amount of short turnover. Lance says, do you think they should continue diluting us now that they have all this cash? That's really tough to say. And it's because it really depends on what they're trying to raise cash for. I've actually found the additional dilutions to be kind of curious, because again, like, they're not a bank. So they're not trying to like just raise cash to raise cash. They're raising it for something. But the other curiosities is normally you don't raise that much cash that early and just hold on to it. So it's clear that there's an opportunistic element to this that hasn't hit the threshold yet, right? We haven't hit that trigger yet. That sticks out to me. The next piece of this in terms of continued dilution, I think there's already a piece of that with the debt. And I also think, I don't know what it is that they're trying to raise money for, but it's very clear that they're trying to have a lot of money. What that means to me is that it's not off the table for there to be additional dilutions. It would not be anywhere off the table to me. But I don't see why at this point, especially when they're sitting on as much cash as they have. But I also don't know what they're trying to buy or how many things they're trying to buy. Super clear that it's expensive, which is why they did multiple raises. They already had several billion before, which is more than enough in general. Peter says, I'm thinking more slow as, not MOAS. Also not sure how the legacy swap mechanics plays out when the fundamental floor rises. I think the whole swap thing, we spent a long time looking at swaps, and I don't think that there's a lot there in terms of predicted or realized impact on GameStop price. In terms of slow as, I don't actually know what you define as that, but I do think that it's very possible for the company to grow, for sure. But I also don't think that the same profile of a squeeze will be there. That's the issue. I think what makes a squeeze what it is, whether it's a short squeeze, a gamma squeeze, is velocity. And without something that causes that compression for velocity to occur, then I wouldn't favor the idea of a squeeze too highly, whether it's slow or whether it's fast. I don't really foresee that. All right, gang. It is time for me to roll. Awesome hanging out, awesome talking some GameStop. It's been a little while. Next weekend, we will have the Pro Plus Hangout stream. But in the meantime, if you guys need anything, you can always hit me up in the Discord. Be an outlier. See you later.